In this video, we will continue the Real or Fake series, in which we find out which YouTube channel gives real strategy backtesting results and which gives fake ones. Today I brought you TradePro, one of the biggest backtesting channels and the one that motivated me to create this channel. If you haven't seen the other videos in the Real or Fake series, you can find the playlist linked down in the description. With that out of the way, let's get right into it. Recently, TradePro tested a simple trend-following strategy on the Bitcoin USD 1-hour chart. In his backtest, he got 37.5% gain on the account after 200 trades, risking 1% per trade. I am going to backtest the exact strategy on the same time interval as he did, and if we get similar results, we can state that TradePro posts real results. If my results are much different, then we know he posts fake backtesting results. First, let's find out when he took the first and the last trade. The first trade he took in his backtest was on the 3rd of January 2020 at 11 PM, and the last one was taken on the 17th of June 2020 at 4 AM. So in my backtest, these two trades are going to be my first and last one. Now I will show you the indicators needed, quickly explain the rules of the strategy, show a few trade examples, and then do the backtest. Let's get right into it. For this strategy, first go to TradingView and set up the Bitcoin USD 1-hour chart. Once you got that, let's add our three indicators, so go into the Indicators tab, and first type in Rejection Zone. We are going to use this one, TradePro Rejection Zone Indicator by Stratfather. The second indicator is going to be a simple ATR stop loss, so type in ATR stop loss. This one by Edgar. And the last one is the stochastic RSI. It's a built-in indicator, click on this one. Okay. So this one will be our rejection zone indicator, this is our stop loss indicator, and this is the stochastic RSI. The rejection zone indicator has two lines. The blue one on default is a 20 length EMA, and the orange one is a 50 length EMA. Basically, when it is colored green, it means that we are in an uptrend, and we will be entering when a pullback happens into this rejection zone. When it is colored red, it means the opposite, so we are in a downtrend, and we are going to look for short entries when a pullback happens. We don't need to change any settings on this indicator, so leave it as it is. The ATR stop loss indicator is going to show us where to put our stop losses. And finally, the stochastic RSI is going to be our entry signal indicator. Now let's see the rules of the strategy. For a long entry, first what you need to see is that the rejection zone indicator is in green. Then you need the price to pull back into this rejection zone. It can pull back with only 1 wick, it can go into it and close inside it, or it can go under it. Doesn't matter, it needs to be a pullback into this zone. Once you got a valid pullback, which is right on this candle, then you have to look down on your stochastic RSI. On the stochastic RSI, what we want to see is that it goes below the 20 line, which is the oversold territory, and then we are waiting for a cross up. As you can see, that cross up happens right here. I will mark it with a line so you can see it clearer. Okay, once we have the price pulling back into this rejection zone and it is green, and we get a cross up, we can enter into a long position. The stop loss will go to this stop loss indicator. Oh, and by the way, you can do one change on this stop loss indicator to make it easier to place your stop losses. You can go into the style settings and change the line styles to step line. This way you can see where exactly those stop losses should be placed. Okay, and the take profit will be a 1 to 1.5 risk to reward ratio. Right around here. As you can see, this trade was a winner. Let's see another example. Okay. Here's another long example. As you can see, this rejection zone is green. The price pulled back into this rejection zone. So now we can take a look at the stochastic RSI for an entry signal. If you go down, you can see that only one line goes under the 20 level, which is the oversold territory. The other one stays above it. When I checked TradePro's backtest, I've seen that only one line is enough for him to consider it as an oversold stochastic pullback. So we can enter into this position right on this candle when the cross up happens. Entry level at the close of this candle. Stop loss goes to this lower ATR line. And the take profit is a 1 to 1.5. As you can see, this one was a loser. Okay, now let's see the rules for short entries. For valid short entry, we want to see the opposite. So we need this rejection zone to be in a red color. Then we need the price to pull back into this rejection zone. And the last thing, we want to see the stochastic RSI go above the 80 level, which is the overbought territory. And then we want to see a cross down. If you zoom in a little bit, you can see that the cross down will happen right here when the blue line crosses under the orange line. So I will mark it. That means all of the criteria is met on this candle. So we can enter into a short position. Stop loss will go to the upper ATR level. And the take profit will be a 1 to 1.5. This trade was another loser, but let's see one last example, then I will go over the backtest. Okay, here you can see that we have that nice red colored rejection zone. The price pulls back into it. So now we have to look for the cross down on the stochastic RSI. As you can see, that happens right on this candle. That means we can enter into a short position here, place our stop loss to the upper ATR level, and the take profit will be a 1 to 1.5 times risk to reward ratio, which is right around here. Now, as you can see, this one was a winner. I hope all of the rules are clear. If not, make sure to go down in the comment section and ask me any questions you have. And now let's see the backtest. If you don't know us or what we do here at TradeSmart, we are backtesting rules-based objective trading strategies 100 times to see which ones are the best and has potential. After we find a good one, we code it into a TradingView trading script and release them to our Patreon members. We also optimize the scripts to bring out the best results while aiming to keep them steadily growing and at a safe risk level. If you become one of our Patreon supporters, you can get access to all of our trading scripts, optimizations, and we can help you set up our trading scripts as a trading bot. Besides that, you can talk to anyone on our team, give suggestions moving forward, and get an insight into our upcoming projects. You can find a link to our Patreon in the description. And now, let's see the results, the equity curve, and the strategy ranking sheet. After backtesting the strategy on the same time interval as TradePro did, we had 224 trades with a 31% gain on the account. The strategy had 45.5% win rate and a 1.25 profit factor. As you can see, the results are not far from TradePro's results. He had 37.5% net profit, I had 31%. He had 47.5% win rate, I had 44.5%. The differences are most likely because of human error. Either he missed a few trades or I took a few extra, misreading the signals. So based on these results, we can say that TradePro shows real backtesting results. Now let's take a quick look at the equity curve and then see the strategy ranking sheet. Here we can see the equity curve of this strategy after 224 trades. What I am looking for in an equity curve is to have an uptrending direction, of course, which is steadily uptrending and with as small pullbacks or drawdowns as possible. This equity curve has only one of those aspects. It is uptrending, but not steadily uptrending, and it has a lot of big drawdowns also. So this is not a strategy I would recommend trading in its current state. But of course, none of this is financial advice, and I am not a financial advisor. Finally, let's see where the strategy is placed amongst all the strategies I have ever backtested. On the strategy ranking sheet, based on net profit after 100 trades, this strategy is placed at the 29th place, with 31% net profit after 224 trades, which comes down to 13.8% profit after 100 trades. This is a decent placement considering there are 66 strategies in this list. We have one more ranking sheet which is based on daily profit in percentage. On this list, TradePro's simple trend following strategy is placed at the 21st place. You can find both of these ranking sheets linked in the description. And with that said, thank you all for watching, check out our Patreon, have an amazing day and see you in the next video.